Well, guys, Google has been on an excellent run, and it seems like it's now the darling on Wall Street, except for folks are now starting to call Google overvalued. So guys, let's break down exactly what Wall Street's saying today. Let's actually get to the truth without the hype, because once again, Wall Street is at it. So make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. And thank you very much for those of you guys that do it this early in the video. It really does help out the channel a ton. So I appreciate all of you guys out there that hit it basically as soon as you jump in the video here. But Wall Street's got some things to say here about Google's great run. Of course, all the antitrust stuff went away exactly like we predicted here. I've been saying it for as long as that investigation's been going on. It's going to go nowhere in the end. They're going to be just fine. There's no need to panic. Of course, that means we got steal deal pricing on Google really since 2022, right? I mean, we started buying it down in the 80s and have been buying it every single step along the way. I know I took heat because Google just kept showing up on my buy list every single month when I put out that list to you guys right here on YouTube, and I get hammered. A lot of folks are like, why are you buying Google? It's going nowhere. It's a terrible company. I don't know. I like buying Google at 120, 130. Heck, we were buying it at 150 or so just a few months ago. I don't know about you guys, but there's no safer risk reward than that. It was the same kind of heat that we took whenever we were buying Meta down in the 80s, for example, in 2022, and a lot of other stocks of that nature. Sorry, we're not into chasing the hot stocks. I'm just simply going to take what Wall Street gives me. And so I'm kind of hoping this narrative almost picks up steam again, so then we can get more deals in a great company like Google. But let's see exactly what they have to say, because somehow Google is now overvalued according to Wall Street.
We go to Marley Caden, host of Market on Close. Good morning, Marley.
Good morning, Nicole. How are you? Talking about this downgrade, it's not necessarily as bad as it sounds. It's not a downgrade coming on anything really negative following that antitrust ruling that was generally viewed very positively by the street and the majority of the analysts who cover Google. So Phillips Securities did downgrade Alphabet to accumulate from buy, but they raised their price target. The price target is now $265. That's up from $235. The firm did say,
so there you go. We're going to downgrade based upon positive news. And then we're also going to upgrade our price target, but we're going to call it a downgrade and continue to move forward. You see exactly how this game is played by Wall Street over and over and over again. These analysts are paid by their own firms because there's a trade on of some sort and they need the trade to move a certain way. That is strictly what they are doing on their buys, or, oh, it's overweight, underweight, all that other trash that you hear, the price targets, everything is basically around whatever the heck the trade is. The only thing you can maybe glean from any of it is simply where the momentum is going. And that's at best what you can glean from it. Otherwise, these type things, you hear it right there. It's nonsensical. It makes absolutely no sense in regards to what they're doing, but yet that they are downgrading the stock. I don't know, guys. You can't make this up. This is Wall Street. This is why you have to ignore the noise. It is so, so key. But let's see. Maybe they make some good points in here. So let's see what else they got to say.
Used last week's judgment ruling positively, believes the restrictions that were given to Alphabet on Google will have limited impact on Google's product strength and its partner incentives. The analyst cited valuation concerns, though, as the reason for the downgrade following the sharp rally in its share price after that ruling came out. Google,
and it's still significantly undervalued from where it's traded in the past. And even if you don't want to call it significantly undervalued, there's absolutely no valuation concerns whatsoever. It's kind of funny. A stock can go on a massive run, and if Wall Street wants to continue to pump that stock, doesn't matter if it's trading at a multiple of 200. They're going to say, "Oh no, oh, you can't judge it that way. You've got to look at it a different way." There, you think about your Dan Ives and people of that nature out there. Palantir at 180. Oh no, we're not concerned about valuation. We're concerned, AI, and all those sort of things like that. You have to understand they simply have a trade on in the background. None of them care about valuation in the end. So whenever a Wall Street firm downgrades based upon valuation, it's honestly laughable because they don't care about valuation. They're never paying attention to valuation. That is not a Wall Street thing at all. It's definitely something they talk about. That may be the reason that they give you for what's going on, but it's not the actual reality of what they're looking at all. If it was, then we wouldn't be seeing Palantir where it's at right now, and you wouldn't be seeing Tesla where it's at right now, and a lot of other stocks of that nature. You'd be seeing much more reasonable valuations on those companies. But yet here we are, a stock that's very reasonably valued, and you can make a great case that is undervalued still, even after this run, and there's valuation concerns. That's why you have to learn to just simply ignore those narratives and do your own work. Do your own valuation. That's why I preach it so hard on this channel. If you understand valuation on a high level, all this sort of stuff is so easy to look past. Even if I would suggest not watching it all, But in the event you want to, for entertainment purposes only, you can watch it and just laugh at what they're putting out there and know that, wow, they're just flat out lying, or they don't know what they're doing, or all the above. Who knows what the reason is? But the point being, you as an investor need to understand valuation on a high level. Of course, you can join my group to learn that. You can learn it right here on YouTube. I'm sure people have put out videos on it. Doesn't matter where you learn it, but you have to learn it. Otherwise, you fall susceptible to somebody saying this, and then you're just going to believe it because, well, she knows more than I do. So therefore, and she's connected there in Wall Street. So, why would they lie? Why would they not say something that's not true? Or, maybe she just, maybe she's a little bit off, but at least she knows more than I do. Well, don't be caught in that spot, right? You want to be the person that knows what's going on, because that's how you make a lot of money in investing.
Shares jumped more than 11% last week after that U.S. District Court judge imposed only limited remedies in the DOJ's case. Back in 2024, Google was found to have maintained an illegal monopoly in its search services and its text advertising through what was called exclusionary conduct. So the most severe penalties, which were sought by the DOJ, were things like forcing the sale of the Chrome browser or having restrictions or a possible sale of its Android platform. None of those happened. They were all rejected by the court. Instead, the ruling now bars Google from entering into any kind of exclusive agreement and also requires it to share parts of its search data with competitors. Google can also continue paying to have its products preloaded, but it cannot tie those payments or licensing agreements to any kind of exclusivity. So generally, investors felt that this was minimal consequences for the company. Phillips echoed that same sentiment despite this downgrade to what's considered a neutral rating or a hold rating. But they did raise that price target, saying, quote, "We view the overall ruling positively and believe restrictions on exclusivity have limited impacts on Google given product strength and partner incentives." They also kept their full year revenue forecast intact. They kept it unchanged, and they lowered the weighted average cost of capital for Alphabet from 7.7% to 7.4%, citing improved sentiment after the court decision. So really, this is just a valuation concern after we saw that sharp rally on this ruling, not necessarily a potential long-term issue here, Nicole.
Yeah, just funny how they basically see everything as positive, as you saw right there in the ruling. It doesn't really have a lot of teeth. They have lots of outs, and more importantly, it's not going to affect the bottom line in any meaningful way. That right there is the key for us as investors. All the other stuff, they'll find other ways around it. They'll, change the deal to where it no longer meets that requirement or no longer hits what they said they weren't allowed to do. And it kind of is playing over here in a little bit of a different space, kind of a, okay, you told me I can't do 1. Okay, no problem. I'm going to do 1A. You didn't say anything about 1A, so I'm going to come over here and play at 1A. They're also appealing the ruling as well, the limited, whatever the heck you want to call it, punishment that they got. They're also appealing that as well. That'll go through the courts for who knows how long, 6 months, a year, whatever the case is. So this isn't even enforceable yet in regards to Google stock. So a valuation concern based upon something that went their way and is going to obviously push up EPS and everything else into the future there. And the worst case scenario is now gone and off the table. I don't know. It just seems kind of silly to me. Seems like more Wall Street games.
Yeah, understood. I mean, it's not all downgrades. I mean, there are some positive calls out there too, no?
Oh, there are certainly positive calls. 82.5% of the analysts who follow Google have it as a buy rating right now. Only 17.5% of them have them as a hold. And as far as what their valuation looks like comparatively, if we're looking at...
So right there, when you see it, everybody's positive on it right now. It's either a buy or a hold. Nobody has it as a sell. Tells you where the momentum may very well be for Google. Again, nothing's guaranteed, but it tells you it was in the doghouse. It seemed like forever, right? All the other Magnificent Seven had big runs, did very, very well. Most of the Magnificent Seven had big runs. They've done very well for the most part. And Google was kind of the laggard based upon a lot of noise. ChatGPT is going to kill it or whatever the case is. We've covered that 100 times here. I don't think we need to rehash that again. However, when it comes down to this, you're saying, hey, they might very well be off the snide and they might very well get a nice run. This is where valuation matters because a lot of folks are going to start chasing the stock now. Now, I don't know where they were when it was at 150, 120, 100, right down in that range. But nonetheless, still a great company, still at a very reasonable valuation right now, meaning that, and obviously it's got some momentum coming behind it. So I'm very, very happy as a shareholder, obviously, and Wall Street might very well be coming around to this stock finally after all this time. But more importantly, I think there's some bigger numbers coming in the future for Google, which is obviously going to push that valuation higher for Google stock, which means we might very well have a lot of legs if we get a sustained run. Now, nobody can predict the future, so nobody knows. Luke is not here telling you I can see the future and it's going to be at 300 before the end of the year or anything else of that nature. I'm actually releasing my bull and bear case for Google in my group right there. Google seems to have a long runway, and I still like the price of Google, even at this point in time right now. Now, obviously, I like the price a lot better 4 months ago, but hey, you know, I can't complain. We got essentially 3 years to buy Google on an incredible discount. So obviously, if you were trying to build out a position during that time, you not only were able to build out a massive position, but add bonus shares upon bonus shares upon bonus shares. And obviously, if you're still looking to add, you can just stick right along with your basic DCA. For those of you guys out there that are DCAing, I mean, hey, you're still getting a reasonable deal on Google right now. So I would see no reason why, if I was in that same spot, I would just keep right on DCAing, at least at this stage, because I'm definitely not seeing overvalued anything here in regards to Google.
Pre-announcement to right now, right before the ruling, they were valued at $2.46 trillion, trading at about $206. Right now, they're trading just north of 237 at 237.22, and their market cap is $2.872 trillion. In all the analyst notes I've seen, I haven't seen anyone say anything that says this has downside to Google. This ruling is negative for them in any reason, for any reason.
Yeah, and just quickly, against the other mega cap techs, we had one guest saying, look, if we start to see some seasonality or weakness in the market, we may trim some of our high beta names in mega cap tech. What are you watching there?
I was just taking a look over at the board just to see how everything's performing today. You know, Google has been a strong performer. I think that people were hesitant because of these looming DOJ issues and the potential implications if they had been forced to sell the Android platform or Google Chrome, what that potentially could have done to share price. So even with this rally, I think that Google had been not beaten down, but had some speculative behavior around it just because there was some more uncertainty tied to Alphabet than there was to any of the other Mag 7s. So I would think that they would be mid-list on terms of if we're divesting any of our shares in terms of the mega caps. But, you know, performing strongly.
Yep, I guess I have no idea what they're going to do, by the way. I could care less what hedge funds are going to do, but it wouldn't make sense to take the money off the table if you're going to pull from the Magnificent Seven away from Google at this stage, considering they're just now getting momentum. And there's plenty of other Magnificent Seven names that are way long in the trade per se, who are significantly overvalued by any metric, and just make for a better candidate to start taking money away from if you're going to play that game. As you guys know, Wall Street underperforms dead people. Most of the hedge funds underperform the freaking S&P. Obviously, we've crushed it virtually every single year since we've had this channel, so there's no reason to follow any of those sorts of guys. But just going along right here with the theme of what they've said and what she's saying specifically, yeah, that right there, if I was a hedge fund and I was going to make that play, I definitely probably wouldn't be pulling the money from Google. I definitely would be pulling from some of those more overvalued names at this particular stage that have had a great run, and now you're looking to move on into something else that still should have some legs for its run moving forward.
25%, so kind of in the middle of the road for the Mag 7.
All right. Marley, Caden, great to see you. Thank you so much.
All right, so we'll go ahead and stop the video right there. I think if it wasn't clear, it's got to be clear now. You guys know my opinion. This stock is still at fair to undervalued territory, in my opinion, of course. This stock has been undervalued for 3 years now. There hasn't been a point in time where I don't think I haven't been looking to add some Google to my portfolio over the past 3 years. It's just kind of been on a rinse-repeat cycle. It'll have a big run at some point in time here, but it just seems like it just gets beaten right back down. Does that continue into the future? Who knows? My job here is not to guess, and I think we've all got to stop chasing stocks. That is what I'm seeing a lot of right now out there among the retail crowd, is chasing. I wait and just take whatever Wall Street gives me. Happened to have been the past 3 years, Google specifically, they gave it to me. And of course, we are up massively on those buys, and really an easy money stock, because it's not like Google's a bad company or a dying company or any of the other narratives that are out there. It's just when you pay attention to earnings, you get into the financials, you're doing your due diligence, you're doing your valuations, you understand exactly what you own. It's just been easy money the past few years. Now, in the time that you're buying, it's not always easy money, but you know when you're buying a great company undervalued, at some point in time, it will return to that fair value. And when it does, that right there is where you make a lot of easy money, and the money comes easy. Sometimes it moves up quick like Meta did for us. And, it was kind of like a rocket ship up, it kind of felt like. And then other times it takes a few years, kind of like Palantir did for us. And obviously Google has done for us as well, finally starting to move after all this time. So just the journey's different for each stock, and you've got to just not chase. Simply have that plan, take what Wall Street executes on you. And if, hey, you happen to get your money back really fast and be, double up, triple up in a very short period of time, great, or more, right? In the case of Palantir and Meta, if you don't, and you've got to wait a little bit longer, that's all part of the game too. That just means you can accumulate an even larger position. So then when you do get the run, you own a lot more shares of that stock, because share count is what matters in the end. And if you don't understand a lot of what we're talking about, due diligence, share count, having a plan, executing on a plan, patience, not chasing, doing valuations, everything else of that nature, that is exactly what we teach in my group. That is exactly what the coaching, the free courses, everything involved in the group is geared towards that. And if you made it this long, I may have left something special for you down there. It's the pinned comment down there for anybody interested. See if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.